IREN stock is showing a strong mid-session comeback on Thursday, currently up about 10% at around $57 per share. That move follows several sessions of heavy selling earlier in the week, which had dragged the stock as low as $53. Today's bounce looks like a mix of short-term relief, improved sentiment across the crypto-linked sector, and a shift in focus back to the company's longer-term story around AI-driven data center growth. Let's unpack what's really going on beneath the surface. First, a quick recap. Earlier this week, IREN had been under real pressure. The stock dropped roughly 25% in 5 trading days. Most of that sell-off came after a wave of crypto market turmoil triggered by the Trump administration's announcement of 100% tariffs on Chinese goods. That single headline set off one of the biggest liquidation waves in months. More than $19 billion in leveraged crypto positions were flushed out of the system. Because IREN still carries substantial exposure to Bitcoin mining, the sell-off hit it hard. Traders pulled back from anything remotely connected to crypto. Add in elevated short interest, some analyst downgrades, and a mid-October insider sale from the CEO, and you had a perfect storm of bearish sentiment. But markets move in cycles, and when the pressure becomes overextended, bounces happen. What we're seeing today looks like the first serious attempt at a rebound. So why the 10% lift? The first piece is sentiment and positioning. Short interest in IREN has been elevated, nearly 14% of the float as of last week. When a stock like this has been sliding for days, all it takes is a small shift in tone or a bit of buying pressure to force shorts to cover. That can spark a self-reinforcing rally, and the trading action today has all the hallmarks of exactly that. High volume, quick intraday reversals, and a sharp move off the lows, those are classic short covering patterns. The second factor is sector tone. The broader crypto mining space and AI infrastructure stocks have both shown signs of stabilizing. Bitcoin's price decline appears to have slowed, and some of the panic around government-linked Bitcoin transfers has faded. The US government did move roughly 667 Bitcoin, worth around $74 million, out of a dormant wallet recently, which rattled traders at the time. But now that those coins haven't been dumped on the open market, some of that fear premium has come out of the system. So part of the rebound is simply relief. The market seems to be realizing that not every government-related blockchain transaction signals an imminent sell-off. That calming of nerves helps all miners, including IREN. Now, there's also been chatter online about the US government buying into BTQ, the Canadian quantum computing security firm. To set the record straight, there's no credible evidence that the US government has taken an equity stake in BTQ. What did happen is that BTQ Technologies received recognition from a US regulatory framework called PQFIF for its quantum-secure digital money initiative. That's about standards and compliance, not a literal government purchase of the stock. So no, the US government is not investing in BTQ, and there's no direct link between that story and IREN's price movement today. It's a good example of how rumors in the AI and crypto spaces can spread quickly and briefly influence sentiment, but there's nothing concrete there. The real story here circles back to IREN's strategic transformation, its pivot from Bitcoin mining to AI cloud and data center infrastructure. Over the past several months, management has been very clear that they want to evolve the business away from being seen purely as a crypto miner. They've expanded their GPU fleet from under 2,000 units to about 23,000 and raised their annualized recurring revenue target for the AI cloud division to more than $500 million by 2026. That's a major shift in scale and ambition. They also closed a $1 billion convertible note offering to help fund that build-out. That capital injection means they have the resources to pursue large data center expansions and liquid cooling upgrades, but it also introduces new dynamics, dilution risk, execution risk, and questions about timing. Earlier in the week, the market was focused on those negatives. Now, it seems to be remembering the positives. IREN isn't just a miner anymore, it's positioning itself as a hybrid, part crypto, part AI infrastructure. That hybrid model is drawing new investor interest whenever broader AI enthusiasm resurfaces. So what's driving the industry backdrop today? AI infrastructure is back in focus this week because several chip and data center suppliers have been highlighting record GPU demand and new cloud partnership expansions. Whenever names like NVIDIA, Supermicrocomputer, or Nebius trend upward, smaller cap GPU infrastructure stocks often follow. IREN, being one of the few miners successfully pivoting toward AI, naturally gets pulled along with that sentiment. There's also a macro layer to all this. After weeks of risk-off trading, markets appear to be in a mild relief phase. Treasury yields have eased a little, and traders are again entertaining the idea that the Federal Reserve could cut rates sometime next year if inflation data continues to moderate. Lower yields tend to help high beta growth names, especially those that rely on future cash flows or heavy capex, such as data center operators. So, in a sense, IREN is benefiting from a broader risk-on tone returning to the market. Still, it's worth keeping expectations grounded. This rebound doesn't erase the challenges. The same risks that drove the pullback earlier in the week are still there. Execution risk remains high, energy costs are unpredictable, and competition in AI compute infrastructure is fierce. But what has changed today is the tone. Investors are no longer rushing to the exits. Instead, they're reassessing whether the sell-off was overdone and whether IREN's long-term story still holds water. Let's look at the main themes individually. First, short-term technicals. The stock found support in the low 50s and has since reclaimed the 55 level, a key area traders have been watching since August. If it can close above 57 or 58, that would suggest near-term momentum has flipped positive. A break above 60 would likely attract algorithmic and momentum buyers again, at least technically speaking. Second, sector rotation. Crypto miners and AI-adjacent plays have both been volatile, but they're increasingly moving together. That's because investors now view data center companies and GPU-heavy miners through the same lens, infrastructure for digital processing. When that broader narrative catches fire, money tends to flow quickly into the entire group. Third, valuation reset. IREN's price-to-book ratio, around 8 times recently, is high relative to peers, but after a 25% drop, the valuation premium looks less extreme. That's giving traders room to justify short-term accumulation without feeling like they're chasing a parabolic top. Fourth, crypto stabilization. Bitcoin appears to be forming a base after its recent washout. If that stabilizes, mining economics improve, and that underpins a large part of IREN's revenue stream in the near term. Finally, macro context. With tariffs and inflation dominating headlines earlier in the week, sentiment was defensive. Today, equity futures are broadly higher, risk appetite has improved, and that's lifting growth-heavy names across the board. IREN fits that bill perfectly. Now, let's address the elephant in the room. Does this rally have legs? The answer depends on two things: whether short-term traders stay engaged, and whether the company can deliver concrete updates on its AI cloud pipeline. The GPU expansion and revenue target are promising, but investors will want to see proof, contracts, customers, utilization rates. Any official confirmation of enterprise deals or AI compute partnerships could act as the next catalyst. Until then, the movement we're seeing today may remain sentiment-driven. That doesn't make it meaningless. Short squeezes and relief rallies often set the stage for trend reversals, but it does mean investors should stay nimble. So what should investors watch from here? Number 1. Price behavior around 55 to 60. If that range holds, it signals real demand returning. Number 2. News flow from peers. Positive updates from companies like Nebius or Core Scientific can indirectly boost confidence in IREN. Number 3. Crypto volatility. If Bitcoin and Ethereum hold steady or start to rebound, that will support the mining side of IREN's operations. And number 4. Macro headlines. Anything easing trade war fears or suggesting lower interest rates could continue fueling speculative sectors like this one. At this stage, IREN's Thursday rally looks less like an isolated anomaly and more like a multifactor reaction. Part short covering, part relief, part sector rotation, and part re-engagement with the AI infrastructure story. It's also worth noting that after several days of fear-driven headlines, there's psychological room for a bounce. Investors who are on the sidelines or short may simply be buying to flatten positions ahead of the weekend. In that sense, we could see volatility continue into Friday as traders digest the week's swings. Zooming out, the bigger picture hasn't changed. IREN remains one of the most interesting crossover stories between crypto and AI. It's risky, it's volatile, and it's ambitious, but it's also sitting at the intersection of two of the most transformative industries on the planet. If management executes, scaling GPU capacity, securing long-term AI cloud clients, and maintaining profitable mining margins, the potential upside remains enormous. If not, the stock could continue to trade in wide, emotional swings driven by news flow and market mood. For now, Thursday's session is about relief and rediscovery, a reminder that in markets like these, fear and greed can switch places fast. The same traders who were panicking at 53 are now watching the stock test 57 and wondering if the next move is back to 60 or higher. And that's the story of IREN right now, volatility wrapped around vision, a company straddling two frontiers, moving fast, sometimes stumbling, but still in the fight. So as the session unfolds, all eyes are on whether today's bounce can hold through the close. If it does, it may mark the first sign that IREN's brutal correction has finally run its course, and that the market, once again, is ready to bet on the next phase of its transformation.